I'll tell you what, guys, I am happier than usual to make this video today, and the reason why is because one of my favorite parks here in Miami Beach that's been closed for about 2 years has finally reopened, and it is Brittany Bay Park. That's where we're walking from right now. You guys can see the park over here, so we're gonna walk through it, and obviously you can see why I love it, because it's right on the water over here. You got this drawbridge over there that's basically the bane of my existence because I get stuck at it all the time in traffic. But we'll probably see some boats go by, as you can see already here. So it'll be a cool little walk, and at the same time we get to talk about the next big crisis that the housing market is facing right now. Oh, you hear that? That's the horn. They're closing it up. Everybody get ready to get stuck in traffic. Not me, I'm here making the video. You guys can see, it's all for that little boat right there that we just saw. It's like maybe 7 people on that boat, but like 500 people gotta wait in traffic for it. It's pretty messed up. But hey, it is what it is. Now, according to this story that I read today, the next big crisis that could be hitting the housing market is people who are taking out cash out refinance offers on their homes. The problem with this, obviously, is that a lot of people use this because they just don't have money to pay for bills. A lot of people are not using this to buy another investment property or to gain wealth or anything like that. They're using this because they need the money, okay? You see they got all these exercise equipments and stuff here that it's all brand new, guys. They just put all this in, so it's pretty cool. And according to this story, the big problem here is that the more people that get into debt with these cash out refinances, not only could it cause personal problems for them with their finances, but it can also cause more trouble with the banks and more trouble with the government in the near future. Because what this says is that current non-bank lenders are making cash out refinance mortgage loans that are guaranteed by FHA. They're particularly doing this in areas that have low income, people that basically need the money desperately that are taking these offers. Obviously, the problem with this is they're giving people a quick influx of cash, but it doesn't really solve their long-term problems, which is that they are not going to be able to pay back these loans in the long term because it just raises their mortgage payment even higher than it is right now. And imagine someone that can't pay their mortgage right now, having a higher payment isn't going to be doing them any favors. I think we can all agree on that. And basically what they're doing is they're advertising and promoting like using your home as a piggy bank or an ATM, which is the worst thing that you can possibly do if you want to have any shot at keeping your house for the long term. Right about now, there is roughly 13,000 new cash out refinances that are backed by the FHA every single month. And if it keeps going at this pace, that'll be 160,000 of these loans that were performed by the end of the year. The problem gets even worse when you take into consideration that they have also been lowering the credit requirements for people that get these type of loans, because the credit requirement dropped from 671 to 637. You can just imagine what this is going to do to people in the long run. It's basically going to lead to more foreclosures, probably in more poor neighborhoods, which ultimately leads to more gentrification, because as these foreclosures end up getting eaten up by more investors, they come in, they knock down these old crappy houses, build nice new ones, and once enough of that happens in a neighborhood, well, now you have a nice brand new neighborhood that, you know, isn't trash anymore, essentially. So that's a real hidden way that these properties end up basically getting stolen from people, but they voluntarily give them up because they're desperate for money. So what they end up doing is just going ahead and accepting these loans without thinking about the long-term consequences because they're desperate for cash right now. So it's a tricky position for people to be in, but I think people need to wisen up. You know, if you're someone in this position that's thinking about doing this just to keep your home, and you know you're not going to be able to make the payments in the long term, you should probably just sell, guys. I mean, take whatever profit that you can get from all this right now while the market is still higher than it was, a few years ago, and just, that's it. Call it a day, and figure out how to live on less after that. The problem is when you give people money that don't have financial education or financial willpower, they end up finding a way to just blow it. And that's exactly what we're seeing here with this. And speaking of mortgages and refinances and all of that, I've been loving sharing these weekly mortgage emails that I've been getting from the Fairway Mortgage Company, because the things that they're saying in these emails are just flat out either lies a lot of times or are just hilarious in what they think is going to happen in the near future. So listen to this one, guys. Tip of the week. When speaking with your potential buyers, obviously this is aimed at real estate agents, let them know the news about the runs on the banks helped, not hurt mortgage rates. This issue, although not directly related to the insurance issuance of new mortgages, helped push rates down recently. It is thought that the Fed is going to stop raising interest rates very soon and begin cutting rates as soon as this summer. Some buyers might think of this situation as scary, but ultimately, a mortgage is one of the most secure forms of borrowing. It is borrowed against a home, one of the most appreciating assets in the world. And then the economic news down there basically describes what we already saw happen with the Fed rate increase. But listen to what these people are saying, guys. They're saying that they think there's going to be the Fed cutting rates as early as this summer. I mean, what kind of crack are they on? Because the Fed has come out time and time again and said that that's not going to happen. In fact, in Powell's most recent speech, after they just raised rates on Wednesday this week, he said that there's basically no chance that they're going to be cutting rates at all in 2023, okay? But yet they have these mortgage companies coming out there and saying that that's going to happen. And by the way, for those of you who don't know, when the Fed does actually cut rates, that is a huge red flag that says, hey guys, we're in a recession. We need to start reversing this policy before everything completely folds up. That's what they're saying when they cut rates. So the mortgage industry is trying to make it look like a good thing when they start cutting rates, because likely mortgage rates will go down. But when mortgage rates go down, that's going to be happening simultaneously along with a pretty severe recession is my outlook on this. And anybody who thinks that's a good thing is delusional. Unless you have 100% secured income, you got multiple sources of income, you have ways to earn money that's outside of a regular job. I mean, it's probably bad news for a lot of people, guys, because look at all the layoffs that we've been seeing. How many people have lost their jobs recently? A lot of people thought the Fed was going to pause this past week and not raise rates at all because of all the bank failures, but instead they keep going with the interest rate hikes. And I think they're probably going to continue with rate hikes for the rest of the year. If anything, maybe they'll slow down in the sense that they'll pause at some point. But to me, I'm starting to wonder how serious these people even are about fighting inflation. Like we talk about all the time in the comments, you guys say this, I say things back, and the overall consensus between a lot of us is that if they're serious about getting inflation under control, they need to raise the interest rates higher than where inflation is. Even if the inflation rate is at these bogus numbers that they're claiming they are at, 6% or whatever, well, interest rates are not at 6% yet, okay? So they need to keep going. But we all know that inflation is probably a lot higher than that. Even if the Fed makes it to the 6% interest rates, I doubt that they even will, but if they do, it's still not going to be enough, guys. And I think even if they make it that far, that'll probably be the point where they pause the interest rate hikes altogether, and maybe shortly after that will come the pivot, because the economy will be decimated by then. That's just the reality of things right now. Even investors are starting to think that there's going to be a rate cut coming sooner than later, because we're seeing the yields drop in the Treasury market. The 2-year Treasury, which is highly sensitive to rates, sank 22 basis points to 3.598%, hitting levels not seen since mid-September. The 10-year Treasury fell to 3.298%, and this is all being spurred by the banking fears and concerns that are going on with the potential of more bank failures happening sooner than later. They're saying that investor sentiment right now is that the major central banks are going to pause their rate hiking and soon think about cutting rates as the global economic activity slows down, as the impact of one of the fastest central bank tightening filters through the economy. In fact, 95% of investors right now think that at the next Fed meeting in May that they're going to pause the interest rate hikes altogether. There's not going to be a rate increase. What do you guys think? I think they're probably going to continue with the rate hikes unless conditions completely fall apart between now and then, and people really start feeling the recession straight up in their face. Maybe then they'll pause, but if that doesn't happen, then I think they're going to continue with the rate hikes. So let me know what you guys think they're going to do. Because one other thing to note here is that when Powell was asked about this in the most recent press conference, he said that they were considering pausing interest rate hikes, but they decided to ultimately go after their goal of taming inflation back down to 2%. And like I just said a minute ago, at this point, I think that's still a joke because they're just not doing nearly enough to get it there, I don't think. But I could be wrong, guys. Like I said, I'm not an economist. I'm just a regular Joe that pays attention, and maybe once everything starts completely falling apart and you start seeing unemployment tick up, then that will be enough to make inflation come down to where they need it to be. But that's yet to be seen. And Powell even said this. He said, these recent events, this recent rate hike, are likely to result in some tightening credit conditions for households and businesses, and thereby weigh on the demand on the labor market. There you go, guys. It's straight from the horse's mouth that, these rate hikes are really going to start messing things up pretty soon. And we've already seen a lot of things get messed up from this, and I feel like it's just still getting started. We really haven't seen anything yet. In fact, listen to this. This is my own little personal anecdote here from something that happened yesterday. When I was walking out on the boardwalk by the beach, I overheard this guy on the phone with, sounded like his stockbroker, and he was genuinely pissed off, got in the phone, guys, and he was saying something along the lines of, I already lost $9 million. I don't know if I should sell. They're saying that, this isn't a recession, but that's ridiculous because I'm not even going out to eat or anything. I'm just staying home. It's all getting out of control with these rate hikes. This guy was just going off. And what sounded like his stockbroker, and I'm not the kind of person that typically eavesdrops, but he was talking very loud, and it was impossible to ignore because he was literally walking right behind me. So I just overheard all of this. Honestly, this is the first time since everything has been kind of starting to crumble that I've heard someone out in public just professing their genuine concern over what's happening. And you can tell everybody that there's no recession all you want, but tell that to the guy that just lost $9 million in the stock market, okay? So I think that's part of the problem too, is that people are disproportionately affected by these credit tightening conditions and these interest rate hikes, and it can lead to the perception that some people just don't think that the recession's here or that there's even going to be one, whereas other people like this guy, who's on the total extreme opposite end of this, is really feeling the crunch already. The poorer you are, the more you're feeling inflation, and the richer you are, the more you're feeling the credit crunch and the effects of the higher interest rates. So really, there's really no good side of this to be on. Obviously, it's great to have money, but it's not great to lose $9 million in the span of about a year. So that's not great at all. And if you ask me, one key data point that can back up the fact that the recession is absolutely here is this. Check this out, guys. More people than ever right now are using the buy now, pay later services to buy groceries. Yeah, that's right. Food, okay? People do not have enough money to feed themselves that they are using buy now, pay later. This is obviously the saddest thing that I've heard since the year started. And the reason that we know this is because Adobe Analytics tracks this. They figured out that in the first 2 months of 2023, the share of grocery purchases with buy now, pay later has risen by 40%. And you know it's a big deal because the amount that people normally use for buy now, pay later on things like apparel, which is just clothes, shoes, whatever, or electronics, has only gone up by 18% and 14% respectively. So you're seeing a massive increase in the amount of people using buy now, pay later just to buy food versus the things that it usually is intended for, which is a very scary thought. And interestingly enough, you have companies like Klarna, for example, who's big on this, that offers a lot of these buy now, pay later solutions for people. And their revenues actually fell 19% year over year, even though more people are using buy now, pay later. And the reason is because they're buying cheaper items like groceries instead of high ticket luxury items, big screen TVs, things like that people would normally finance with this that usually cost a few grand, versus spending a couple $100 on groceries is not as profitable. But when they ask Klarna and Affirm, the two big companies that offer a lot of buy now, pay later services, they're attributing this to just smart consumers stocking up on things online when it comes to buying groceries in bulk and trying to save money. And it's all just coming down to smart consumer spending, not that people are broke. So I don't know. Let me know what you guys think about that. Obviously, we're just assuming things here and drawing conclusions, but I'd never heard of people doing this up until now. Have you? Because one thing we know for sure is that food inflation has reached record highs in the US over this past year. You're also seeing an uptick in the amount of people that are buying groceries from places like the Dollar Tree. And I think all these trends are more than just a coincidence, guys. I think this is just a huge reflection of what's happening in today's economy and just how broke people really are. But these people aren't broke. One thing I was thinking about is one of these days hiring one of these charter boats to take me out there through the canals here, and we can do a video like that. We can cruise slowly through the canals and look at some of the houses like that. That'll be pretty cool, huh? Let me know if you guys think that's a good idea. Now, one thing that's interesting with the housing market right now is the most that we're seeing with sales is in the new home market. In fact, brand new home sales went up 1.1% last month. But they also are still down 19% year over year. So it's not like sales are roaring back or anything like that. It's just that they slightly improved, which largely probably had to do with the small cut in interest rates that we saw. When you combine lower interest rates for a moment with the fact that there's not a lot of resale inventory on the US housing market still at the moment, I think, like I've been telling you guys for a while now, that the best deals to be had this year throughout the real estate market are likely to be in the new construction market, okay? You're having home builders that are recognizing that there's an opportunity to build for people because the demand is still there for people that want a house, and if they're not listing homes in the neighborhood, well, let's build them, and people are buying them. So home sellers think that they hold the upper hand right now, but the reality is the new construction market is likely gonna fill in their shoes, whatever they're not doing when it comes to listing the property. So, okay, you don't want to list your home for sale, you want to wait until it's even more expensive. Well, good luck with that, because you're going to have a lot of new construction homes as your competition right now. Which is why the other day I made a video telling people like, hey, listen, if you want to sell, you should do it now while the getting's still good. Now, I'm not saying that you should just sell no matter what. I'm saying that if you've been thinking about selling, then now's a pretty good time to do it, considering that spring home sellers typically get a lot more money for their homes than people who are late to the table and not selling until the end of summer, for example. But the chief economist over at the National Association of Home Builders is concerned that tighter credit conditions stemming from the recent bank problems could impact acquisition, development, and construction loans for smaller builders, guys. So that's why I keep telling you that these banking problems are just getting started. We haven't really seen the full impacts from these banking issues just yet. And if it impacts the ability for home builders to actually build homes, that's probably going to be the least of our problems by then, because obviously it's affecting everything in the economy. People aren't going to be able to even get loans to buy homes either, and you're already seeing a lot of banks refusing to lend on commercial properties and things like that. So get ready for the credit crunch like we talked about the other day, because it's basically on our doorstep. There it is again. Twice since we've been sitting here talking. Look at that. That's how much this drawbridge goes up, guys. Imagine that happening during rush hour and not being able to move for God knows how long. And one last thing to keep in mind with this is that a new home sale is triggered when a for sale contract is signed and a deposit is accepted. That does not mean that the home buyer closed on this brand new property. So if they're saying that the brand new home sales went up only 1% last month, there's still a high chance of cancellation with these new buyers. So what sounds like good news for these home builders might not be that good of news after all if people end up changing their minds and backing out of these purchases, which is yet to be seen, but I think is pretty likely to happen given the state of affairs that we talked about in this video. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video, and if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.